I want to talk about your price target for Amazon. We're looking at the big moves Amazon's made year to date, up 30%. Your price target a bit more bullish than the rest of the street at 230. What are you seeing in the stock that makes you more bullish than the average analyst?
Yeah, I mean, I think we can talk about AWS in a second, but what I would point investors to is certainly the advertising opportunity from here going forward. Because I think where Wall Street is too low on expectations for advertising is when you think about third-party marketplace as where all the commercial activity around advertising sits. And you look at the growth rates of third-party marketplace and advertising, they're converging fairly quickly in consensus estimates after 25. And that is literally makes no sense. As we first see, like more ad load, like room to grow, especially in international territories. And on top of that, you actually have the Amazon Prime Video opportunity, which will also have some positive effects, like on things like Twitch and Fire TV and so on. And aside from all the investments into like sports content and so on, Prime Video as of now, might be like $1 billion in revenues opportunity or like business for this year, but it might be like a $10 billion plus opportunity like in a year or two from now. And the market is completely not factoring that into their numbers. And that's literally where we see the outperformance. Also thinking
Rocco, you're saying that the market's not factoring that into the numbers, but you're also saying something I think that's a bit of a contrary opinion. You're saying that the ad business is now the driver of Amazon. It's not the AWS business, as many of us often believe.
Yes. Yeah, I mean, I think what's interesting when you model this through properly, what you see is that the main absolute gap profit driver is advertising and is likely going to remain advertising at least until 28 or 29 before AWS is actually catching up in size, right? You have to think about the different margin profile. Advertising is 65% plus margins. Mainly on the Amazon.com properties, and AWS sits somewhere in the kind of like low to mid 30s going forward.
So it's a higher margin business. Okay, I want to go back to AWS. Obviously, still a very important part of Amazon's business. According to your research, artificial intelligence is a $70 billion opportunity for AWS basically over the next decade. But what does that mean? We often talk about there not being 100% clear use cases for AI. What does that mean when we're talking about AWS?
Yeah, I mean, certainly right now, I mean, most of the Gen AI investments are going into training models, right? Not really into applications. And that certainly is the case for Amazon as well. But what you see, like literally with all of the hyperscalers, that's true for Meta, Google, and Microsoft as well, not so much for Apple here. I mean, they're going to invest big, right? And if you look not at incremental CapEx, but at expansion CapEx, you see that all of them are able to build these 1 million plus GPU clusters, say until like 2027. That certainly is going to lift them. And then also have in mind, the market loves to speak about the market share of AWS. They have lost market share for 6 years, and they will so going forward. What's more important is the overall pie, right? I mean, cloud is going to quadruple to like 1 trillion by 2034 or so. And Amazon is going to take massive share here as well. Maybe not as a share gainer, but as an absolute revenue and profit contributor to the business. And that's what we go see to come through.
One last question for you, Rocco. Your estimates are that Amazon is going to spend $13 billion on CapEx during this fiscal year. What does that mean when it comes to this AI race? Do you believe, in your mind, are they spending enough? Are they not spending enough?
Yeah, I mean, it's $13 billion incremental on the AWS side, to just be precise here. I mean, like if you add whatever is, like in the previous year and comes through as expansion CapEx, you rather get to a number of like 17 or like $18 billion. And they're going to repeat this. Right, and DNA will be somewhat low. Also, like the replacement cycle only kicks in for these GPU type servers in like 2, 3, 4 years from now, which means they're going to spend north of $100 billion over the next 4 years into the Gen I opportunity. And they wouldn't do this if they would not see revenues coming against it or having kind of like contracts against that signed already.